Hey, what's up? I'm Russ. Welcome back to another thrilling installment of a Dapper Dividends video. In the past, I've watched YouTube videos on this particular subject that have really rubbed me the wrong way. And when you rub Russ the wrong way, he remembers. And it's about this idea that you're going to buy Realty Income stock, ticker O, to pay your monthly rent or your monthly bills. So saddle up, partner. I'm going to use math and show you exactly why Realty Income is not going to pay your rent. Real quick background here. Realty Income was founded in 1969. They invest in diversified commercial real estate and has a portfolio of over 15,000 properties in all 50 US states, the United Kingdom, and 6 other European countries. They own things like drugstores, convenience stores, and dollar stores, and most of their tenants are big companies like Walgreens, could be a problem, Dollar General, also could be a problem, and 7-Eleven. And they're known for having long-term leases where the tenant pays all the operating costs on top of their monthly rent. And that's called triple net lease. The good news is that Realty Income is super stable because their tenants tend to stick around. And most of their rent comes from companies selling everyday essentials. And the not so good news is that their growth tends to be a little bit slower than other investments because they're focused on steady, reliable income rather than rapid expansion. And I highly recommend visiting their website and looking at their newest quarterly investor presentation, which I have linked below. And hey, I also have a link to my free and fantabulous newsletter, which you can sign up for at DapperDividends.com. As of this recording, the average one-bedroom apartment in the United States runs about $1,748 a month. It's time to do some basic math. So monthly rent is $1,748. The yearly rent, when you multiply that by 12 months, would be $20,976. So the shares needed of Realty Income, 20,976 divided by 0.264, which is the current monthly dividend, times 12, or $3.17 is the annual per share payout right now, means you would need 6,617 shares of Realty Income. And if we multiply that by today's recording price of $52.51, means you would need $347,459 to cover your annual rent on that one-bedroom apartment. But wait, there's more. Few people talk about taxes. And this is important because Realty Income is a REIT, a real estate investment trust. And the big thing about REITs is that their dividends are taxed as regular income. So this isn't like normal stock dividends that might get special tax treatment. And because you're going to be paying your rent with this, you can't hold it in a tax advantaged account where you would be penalized for early withdrawals. So we have to assume that this is going to be held in a taxable account. So here's where it gets fun. We get to calculate the taxes involved, which if you remember, after tax, you need $20,976. But don't forget that this would be ordinary income that you would have to pay tax on. So you would actually need $23,598. And this is how we figure that out. It's because in the United States, in 2025, for non-qualified dividends, the first tax bracket for a single person, which we will assume you are, you would pay 10% income tax on $0 to $11,925. And because it's marginal, that would mean the first dollar after $11,925 would be taxed at 12%. So that first tax bracket of $11,925 times 10% would mean you'd have to pay $1,192.50. When we hit you with that second marginal tax bracket, that would be $11,912 times 12%. You would owe $1,429.44. When you smash the two together, that's a total tax liability on those Realty Income dividends of $2,621.94, which would get you to that $20,976 you would need for a year's rent. So here's the final calculation of what I think you would need currently to pay for 1 year's rent using just Realty Income. The monthly after-tax need is $1,748. That would be a requirement of 7,444 shares of Realty Income at this video's recording price of $52.51 a share. That would be a total investment of $390,884. Look, Realty Income is a solid company. They've been paying dividends for over 50 years straight and increasing it multiple times a year since going public in 1994. But here's the reality check. If you have almost $400,000 lying around to invest, I'm gonna guess you're probably not going to be renting a one-bedroom apartment. And if you are renting the average one-bedroom apartment, you probably don't have $400,000 sitting around waiting to be invested. I'm not saying this to discourage anyone, and building passive income takes time. Lord knows I'm still working on it myself. But if there's one really important thing that I've learned, you need to earn money before you can invest money. And learning has unlimited upside potential, so make sure you learn and then go out and earn. Start small, reinvest your dividends, and keep building. If you found this helpful, hit subscribe, and hey, in this floating little box next to my head, I had a fantastic conversation with another REIT's CEO, Joey Agree from Agree Realty. So if you click this floating little box in my head, we will talk to you there.